Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I will also be ceasing coverage on several names as well. Do check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. This video will be mainly about US dollar and US dollar crosses. I noticed that I have not updated these crosses for some time because simply there wasn't any meaningful development. But after this week, I believe there are meaningful developments for me to start covering, or rather start reviewing on these crosses. For equities, there will be another video featuring only equities coming on the 22nd of September. Do stay in tune for this. But for now, US dollar, the most important one of course will be the dollar index. In the video on the 21st of July, I said that the DXY is technically bullish after completing a falling wedge, a bullish pattern. Price action has fallen, no doubt, but this, in my view, is just the correction phase of this bullish pattern. What are positive signs to watch for will be a close above the 20-day simple moving average, as well as closing above the Ichimoku cloud. This would be preferred, and I believe would likely tilt the DXY into the bullish resumption phase of the bullish pattern. The textbook target of this falling wedge is at 102.52, but let's note that there is another formation of a bullish pattern. That is the double bottom after this week's rebound. This bullish pattern requires a close above 100.25 to complete. I covered dollar Swiss on the 2nd of August and said that dollar Swiss is technically bullish. Well, it didn't perform as expected, sliding lower and closed below the cloud. I view this as the correction phase of the falling wedge, and I suspect the bullish resumption phase is about to start. Now, what will be good signs to watch for? That will be closing above the 20-day simple moving average will be a good start. Closing above the Ichimoku cloud will be even better. The textbook target of this falling wedge is at 0.8533 with potential rejections at the resistances 0.8348 and 0.8476. I am willing to give up on this bullish view if dollar Swiss falls below 0.78. I last covered dollar yen in a video on the 2nd of August, and I noted that dollar yen is in the bullish resumption phase of its cup and handle bottom bullish pattern. So far, it has not performed as per my expectation, but at the very least, let's stretch it to zoom in on the price action. At the very least, I can see that downside bias throughout August and almost the middle of September. Downside bias is soft. Now over here, despite failing to hold above the 20-day moving average despite closing below the Ichimoku cloud, it quickly rebounded to close back above the 20-day moving average and hold above the Ichimoku cloud. Now the price action over here on the 19th of September, intraday slipped below 20-day moving average as well as into the cloud, but very quickly also rebounded back above the cloud, telling me that downside bias is soft. This cup and handle bottom bullish pattern has a textbook target at 157.41, but I would be convinced that dollar yen has entered the bullish resumption phase only with a close back above the neckline 148.64. In the video on the 23rd of August, I said that Kiwi dollar should head higher first due to over here overextension below the lower Bollinger. Of course, the rebound was stronger than I expected, bringing Kiwi dollar back into the Ichimoku cloud. But this week's rejection at the cloud over here is likely the start of the bearish resumption phase, seeing how price action has gone back below the neckline of 0.5904. The textbook target of this head and shoulders top bearish pattern remains unchanged at 0.5688. I last updated dollar real on the 9th of August and maintained that it is still bearish because it completed a head and shoulders top. But let's examine the recent price action. Now since then, dollar real has had two rebounds that failed to hold above the 20-day simple moving average and broke below the support at 5.4063. This week, dollar real appears to have bounced off the second support that I highlighted, 5.2871. Also, we can see that over here, price action overextended below the lower Bollinger. I expect the next move for dollar real to be higher first, as a correction probably could get to and rejected by 5.4063 or by the cloud resistance somewhere around here to resume the downside. The textbook target of this head and shoulders top is at 4.9543. Moving on to new coverages, I will be covering 4 new FX crosses, starting off with sterling dollar. This week's price action development suggests the formation of a head and shoulders top in sterling dollar. Price action on the 17th of September is an upside exhaustion candlestick, suggesting that downside is preferred, and the latest close on Friday below the 20-day simple moving average, as well as closing slightly within the Ichimoku cloud, are also signs of further downside. Now, closing below the Ichimoku cloud is expected to tilt sterling dollar lower, and this bearish pattern will be completed if there is a close below the neckline at 1.3141. The textbook target is at 1.25. Over to dollar CNH, I believe a bullish pattern is being formed over here, a falling wedge. There are other signs suggesting downside is limited and a potential rebound going forward. Now over here, price action just bounced off the support trend line twice this week and has bounced off the support at 7.0869. Since then, price action has diverged from the lower Bollinger, and note that there is price momentum divergence on the RSI, meaning we can see that price comparatively is lower over here, but the RSI is comparatively higher, and this usually suggests a near-term rebound. This bullish pattern will be complete if there is a breakout above the resistance trend line, and if true, it suggests a potential move of around 815 pips. There are 2 more falling wedges to cover in this video. Both are Nordic currencies. Dollar stocky, that is the dollar against the Swedish krona, may be forming a falling wedge after bouncing off the support trend line this week. Now note that this is not a newly formed support trend line. This trend line was formed by the low on the 12th of June, and this week's downside just happened to bounce off this trend line again. Also, the latest close is above the 20-day simple moving average, and this has given it some upside boost. Closing above the resistance trend line is required to complete this bullish pattern that suggests a move of around 1.01. Alternatively, closing below the support trend line would invalidate this bullish pattern. Similarly, dollar NOK, that is the dollar against the Norwegian krone, may also be forming a falling wedge, but this one can be a bit skeptical because the support trend line over here was just formed this week, unlike dollar stocky I showed you earlier on. In any case, closing above the resistance trend line is required to complete this bullish pattern that suggests a move of around 7,639 pips. Closing below the support trend line would invalidate this bullish pattern. Moving on to names in which I will cease coverage, I will cease coverage on Aussie Kiwi. I started coverage on Aussie Kiwi on the 28th of April, citing the formation of a falling wedge that had a textbook target of 1.0955. This target was eventually met. Along the way, I noted the formation of a cup and handle bottom, which was eventually completed, and the textbook target was at 1.1188. This textbook target is 100% met on the 16th of September. Now I expect the next move for Aussie Kiwi to be lower first, because we can see that price action has overextended above the upper Bollinger. I will also cease coverage on gold. I turned bullish on gold in the video on the 1st of September, noting the breakout above 3,435.63 that completed the rectangle pattern. The textbook target was at 3,625.59. This target was fully reached on the 8th of September. Just to add, price action we can see is starting to diverge from the upper Bollinger, and as I frequently said, breakouts are often accompanied by corrections to the points of breakout, which is currently at 3,435 before upside resumes. So I suspect the next move for gold is likely to be lower first. I will cease coverage on the euro dollar. I showed the formation of a rising wedge on 12th of July, but recent price action has invalidated this bearish pattern after rising above the last high at 118.30. Last but not least, I will cease coverage on dollar SGD. I was bullish on dollar SGD due to the completion of a head and shoulders bottom, but this week's decline below 1.2746 has invalidated this bullish pattern. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.